Welcome to today's Business Report. I'm Denise Williams, bringing you the developments shaping markets, capital access, and business decision-making across Jamaica and the region. Let's get into the stories that matter. Members of the business community are warning that new taxes coming after Hurricane Melissa could slow economic recovery and place an additional strain on already struggling businesses. The concern follows comments from Finance Minister Fayval Williams that tax increases are necessary to help plug the fiscal gap created by the storm. Fosrich CEO and Vice President of the Jamaica Manufacturers and Exporters Association, Cecil Foster, told RJR News that additional taxes will be burdensome for businesses and consumers still trying to recover from the hurricane. Garnet Reed, president of the Small Business Association of Jamaica, argues that the sector, already under pressure from the storm, is in no position to absorb new taxes. He says small operators urgently need access to affordable financing to rebuild and expand, not higher costs. Meanwhile, senior investment advisor at Mayberry Investment Group, Christopher Thomas, says tax increases could further weaken the stock market, which is still recovering from the effects of the COVID-19 pandemic. He adds that brokers will now have to work harder to protect clients' investments, and he describes this as a contracting environment. For the trading period of February 13, 2026, the most actively traded securities were Trans-Jamaica Highway Limited with 9,477,453 units, representing 32.45% of market sales activities. Wigtown Energy Limited with 5,041,630 units, representing 17.26% of market sales activities. Carreras Limited with 2,335,985 units, represent 8% of market sales activities. Investor activity remained concentrated in transportation, wind energy, and cigarette distribution plays, signaling continued interest in dividend-producing and strategic assets. Turning to the foreign exchange market based on Bank of Jamaica data for February 13, 2026, Forex traders recorded significant activity with strong demand across major currencies. For the US dollar, trading margins reflected steady liquidity, with the US selling at $157.02 and buying at $155.17. For the Canadian dollar, moderate gains supported by $6.97 transaction spreads. The Canadian dollar sold for $117.15 and was bought for $110.18. For the British pound, continued volatility offered short-term trading opportunities of $7.10 in profits for the banks. The British pound sold for $215.89 and was bought for $208.79. These movements underscore the importance of cash flow timing and currency awareness for businesses managing import costs, debt servicing, or overseas exposure. For our credit report tip of the day, a credit report is a tool, not a judgment. Debt and credit worthiness are different. Debt is what you owe, while credit worthiness shows how reliably you manage money. Many people avoid their credit out of shame, but that avoidance often makes problems worse. When you treat your credit report like an asset, you check it, fix errors, and use it carefully to open future opportunities. Managed well, credit creates options and flexibility. It reflects what you do next, not what happened in the past. And that's today's Business Report. I'm Denise Williams, bringing clarity to capital markets and strategy. Until next time, stay informed, stay intentional, and keep building forward. See you soon.